Well, Asian markets, they trade lower amid the ongoing geopolitical concerns. Also closely watched is the meeting between US President Donald Trump and North Korean leader Kim Jong-un, who are set, to enter the second day of nuclear talks in Vietnam in a few minutes from now. Now, in terms of data coming in from China, the February official manufacturing PMI, that came in at around 49.2. That compares with a reading of around 49.5. And also the non-manufacturing PMI came in at around 54.3. That compares with around 54.7. But Asian markets for starters, they're trading in the red. Nikkei is down close to 0.5%. The Kospi as well was down 0.2%. And both the other couple of markets, that's the Straits and the Taiwanese index, have opened up with a bit of a negative bias. The SGX Nifty, that's indicating maybe a 15 to 20 point downtick just to kickstart trade. But the real action today will be in the second half of the trade, and particularly in the final hour of trade, because today is expiry day as well.
Federal Reserve Chairman Jerome Powell, in the second day of his congressional testimony, said the central bank is close to an agreement on the balance sheet plan. He also described the U.S. economic outlook as favorable, but noted headwinds from global markets. CNBC's Steve Lisman reports.
Well, Fed Chairman Jerome Powell going further than he has in the past about plans by the Fed to end the runoff of its balance sheet. He now confirms the Fed is working on a plan to end the runoff later this year.
We've now had 3 consecutive meetings on the balance sheet, and we've worked out, I think, the framework of a plan that we hope to be able to announce soon that will light the way all the way to the end of balance sheet normalization, and that will result in the end of asset runoff sometime later this year.
As you heard in some sound at the top of this show, that they haven't quite figured out what the right equilibrium level is. The Fed is not also raising its inflation target, rather than changing its inflation communication of its goal. The Fed does not want to lower capital standards for big banks, Powell told the House Financial Services Committee as well there. And in addition, Powell stuck to his mantra of the Fed being patient on policy and that the U.S. economy is in good shape, but faces risks from abroad and some domestic issues as well. Now, many Fed watchers say that plan to unwind the balance sheet could be agreed to and made public as soon as the March meeting. That plan could show the Fed will be comfortable with a balance sheet of around 3.6 or 3.7 trillion. So just $250 or $300 billion of assets to run off, guys.
Well, let's also hear out what experts have to say on the Fed chair's testimony and the rate trajectory going forward.
Chair Powell, I thought he gave a very smooth, confident performance. He knew what he wanted to say and what he didn't want to say. You feel like he's really taking control now, and I think that's a good thing. I think it gives a more predictable Fed, and I like very much that he sort of recognized that they might be at the neutral rate now. And so that's kind of reining in the people who say, well, unemployment's low, the economy's growing, we have to keep raising interest rates. And he's done the same on the balance sheet. I think that's less important. But again, I think it makes the Fed more predictable and easier to understand.
The Fed obviously has pivoted. Now even the balance sheet looks like it's going to go away. You know, they're going to keep a pretty hefty chunk of reserves in the system. So maybe the balance sheet runoff ends at the end of this year. Now there's even talk about this new sort of price level targeting or some variation of that, where they're going to allow inflation to overshoot above 2% for as long as needed to compensate for the persistent undershoot that we've seen. So all of it is a more dovish tilt, not only kind of for the cycle, but even beyond that.
Well, on to another testimony in the United States. U.S. Trade Representative Robert Lighthizer also testified in front of the House Ways and Means Committee. His testimony comes as China and the U.S. try to strike a deal to avoid a full-blown trade war. CNBC's Skylar Toshe has more details.
President Trump's top trade official took more than 3 hours of friendly fire from the House Ways and Means Committee, where he received largely bipartisan praise for being willing to take on China directly. And in that testimony revealed just a few details about a hypothetical deal with China. He said it would include agricultural purchases for several years, that it would end certain Chinese state subsidies to sectors that have oversupply of things like washing machines and solar panels, that there would be a mechanism to prevent currency manipulation downward, though Ambassador Lighthizer said he actually believes China is doing the opposite. And there would be a regular enforcement dialogue at all levels of government that would happen multiple times a year. But despite progress in these areas, Ambassador Lighthizer said there is still much work to be done.
I'm not foolish enough to think that there's going to be one negotiation that's going to change all of the practices of China or our relationship with them. I don't believe that. And I believe other problems will arise, and they're going to have to be dealt with. I view this as a process, but this is I use the term turning the corner. This is the first time, I believe, that it's been approached in this way. And it's really the result of the creation of an enormous amount of leverage by the president.
And amid reports of increasing tensions between President Trump and his top trade official, Ambassador Lighthizer repeatedly credited the president with empowering and inspiring his trade agenda.
All right, let's take a look at the U.S. markets, where the stocks bounced off intraday lows but still closed mostly lower as investors focused on congressional testimonies from U.S. Trade Representatives Robert Lighthizer on U.S.-China trade negotiations and Federal Reserve Chair Powell's Day 2 congressional hearing. The Dow and S&P 500 fell for second day on a row, while the Nasdaq egged out minor gains.
Okay, turning our attention to the European markets, then they closed lower. Investors out there, they're focusing on the meeting between US President Donald Trump and North Korean leader Kim Jong-un. Now, the other big focal point is Brexit. That continues to be the key focus in the region. Now, in the latest, British Prime Minister Theresa May has offered lawmakers to vote on a no-deal Brexit or to postpone the UK's impending departure from the European Union if a proposal isn't accepted.
Well, let's move on to the currency space. The dollar holds on to overnight gains supported by higher bond yields. Meanwhile, safe haven yen weakens versus the greenback.
And in the world of commodities, and crude oil prices rise, adding to gains made in the previous session. Now, this after US inventories unexpectedly plummeted and Saudi Arabia brushed aside comments from US President Donald Trump seeking to keep oil prices under check. Remember, just a couple of trading sessions ago, the Brent crude prices had fallen to around $64.50 per barrel. Now they're almost back at those levels of around $66.50 per barrel.
OPEC has been doing a great service, not only to producers. You can ask the producers in the shale basins in the United States whether they had benefited from the actions that we have taken over the years, in particular during this longest cycle, where we saw prices crashed by over 80% at one point, where we saw the supply-demand balance went into disequilibrium that had never been witnessed, where we saw companies in the United States, more than 100, file for bankruptcy, with all the negative consequences on the industry, on the regions where they operate. The United States today, as I said, is the biggest producer in the world. And we are proud of the achievements, leveraging on the most sophisticated financial system in the world, if you like, continuing to attract capital from both public and private equity, and meeting this growing demand. Without the shale revolution that we have seen in the US, the world would have been in major energy chaos. What is needed now is for us to continue this relationship with the non-OPEC in order to sustain the relative and fragile market stability that we have been able to achieve.